Hello, this is Nataraja Upadhyaya. I am back with a special mutual fund report, which is done monthly. My promise to you is that every month, at least once, I will look at equity funds in details and give performance analysis with the distinctions by subtypes. There are 20 different equity funds, and today we are going to look at the performance of all these 20 subcategories. So this report is as on August 9th, that is the last Friday. You just now might have gone through the monthly top 50 analysis as on August 9th. Now overlapping that, you could look at this detailed equity funds performance analysis by subtype. So this is very exciting because your overall knowledge of equity funds goes up and the pulse of the market will be at your fingertips because you are looking at the performance by subtypes. Now, let us look at this table. Though it looks very busy, if you look at it in an orderly fashion, it becomes very clear. See, what I have is the 20 subtypes, and for each subtype, I have mentioned how many funds are there. So totally, there are 871 equity funds in the universe as per the value research, and the breakup of these 871 by subtypes are given here. Now, as usual, the performance is given for timelines 1 week, 1 month, 3 months, 6 months, and 1 year. So these are the 5 timelines. And for each subtype, the average return are given. These average returns are based on the average of these funds that are in that subtype. Now, for the entire equity mutual fund universe, which is 871, the averages are given here in the amber color. Now, those averages which are below these averages in amber are shown in red color, and above those amber averages are shown in green color. So the funds with more green are definitely more preferred funds because they are saying that they have done better than the overall equity average. So as you go down the list, you see more red colors. That is because this table is organized by the overall performance of the funds across all the timelines. Now, what it means, let's understand. At the right side, you would see the ranking of each subtype for each timeline. That is 1 week, 1 month, 3 months, 6 months, and 1 year. The rankings are given, which can vary from 1 to 20. Now, these rankings are added and an average is taken. And based on that average, the overall return ranking is given, which is the average returns across all the timelines are averaged and then ranked. So the top of the table are the funds which are most favorable to invest. Bottom of the funds at the list are the least favorable to invest. However, there could be exceptions in each table because though the overall fund subtype may be underperforming, there could be 1 or 2 funds which may be super performing within that. So watch out for that. For example, small cap funds is somewhere stuck in between. Got it, huh? The top performers, let us look at it. Pharma funds are ranked number 1. There are 23 funds, and pharma funds are ranked number 1 for the week, number 1 for the month, number 1 for 3 months, but number 7th for 6 months, number 8th for 1 year, and overall rank is number 1. Consumption funds, there are 22 funds. They ranked 2nd for the week, 3rd for the month, 8th for 3 months, 2nd for 6 months, and 13th for 1 year, and overall ranking is 2nd. Next one is PSU funds. There are only 8 such funds. Now it is ranked 17th for the 1 week. That means PSU funds are going through some corrections. 6th for the month, 3rd for 3 months, 6 months average, the ranking is 3rd, and 1 year ranking is 1. Therefore, overall ranking comes to 3rd. I will discuss 2 more such funds in the top. Midcap funds are 4th in place. with the 9th place now for the week, 14th place for the month. That means recently they have not been doing well, but 3 months ranking is 5, 6 months ranking is 4, 1 year ranking is 3, overall ranking is 4. One more I will discuss is multi-cap averages. Multi-cap funds. There are 30 multi-cap funds. Current weekly ranking is 4, monthly ranking 8, 3 months ranking is 9, 6 months ranking is 8, 1 year ranking is 10, overall ranking is 5. So I will not discuss the rest ones, but let us discuss the bottom 5. The worst performing funds are the international funds. There are 69 funds. You can see they are 20th in ranking in all timelines. Banking fund, which is 19th in ranking, is slightly improved performance in the last 1 week. So maybe some recovery is in sight, but it is in the bottom. Third worst is MNC funds. There are 6 funds, and the flexi caps are bottom 4th, and large caps are bottom 5th. See, usually bottom large cap funds are preferred in a bullish period, but here our large cap funds, there are 169 large cap funds. They have taken only 5th from the bottom, so 16th in the rank, which is kind of a sad story. Now we are going to discuss all these subtypes funds in detail, and we will discuss that in the descending order of performance and therefore preference. So as we go to the bottom of the list, we are going to more into details, but there may not be any investment worthy funds to look at. So let us start with the first one, pharma funds. There are 23 pharma funds. Now let us discuss about this green and amber significance within this report. When I discuss top 50 mutual funds analysis, which is done on a monthly basis and done for every week, the green ones are typically meant as investment worthy, and ambers may be also investment worthy. But in this analysis, you should not consider green as an automatic investment worthy. What green means is that within this fund subtype, it has shown above average return in all timelines from 1 month to 1 year. The amber ones means it has above average return in all timelines except for one timeline. That's all. So when I discuss it in detail, I am going to discuss only the green ones. So amber ones also may be worth looking at, because maybe they will recover and therefore may come to green in the next few weeks. So here the one in green are HDMC. See, all funds are sorted at the by the monthly returns. So that is a standard format in all 20 subtypes. So I will not repeat it. So within the pharma funds, which are doing extremely well recently, the one in green are HDFC Pharma and Healthcare Fund, UTI Healthcare Fund, Tata India Pharma and Healthcare Fund, ITA Pharma and Healthcare Fund, ICICI Prudential Pharma Healthcare and Diagnostics Fund, White Oak Capital Pharma and Healthcare Fund. Only these are shown in the green. So among the green ones, the top return for the month was 10.05% and the least was 7.96%, which is very impressive. But the sad story comes is that annual return is a bit subdued because pharma funds did not do well until recently. I would say only in the last 3 months they are doing well. Now the highest annual return here I see is Quant Healthcare Fund with 59.68% for the annum, but it did not make it to the green because the monthly return was below average within this 23. Okay, so that is about the pharma funds. Next one after the pharma funds is the consumption funds, which are ranked second. There are 22 such consumption funds. The one in the green are Tata India Consumer Fund, Kotak Consumption Fund, Mirae Asset Great Consumer Fund, Baroda BNP Paribas India Consumption Fund. The monthly return within the green highest is 4.77%. The least was 3.22%. And among the green, the top annual return was by Tata India Consumer Fund at 42.50%. So that is the second ranked funds. Now let us go to the third one, which is the PSU funds. PSU funds did extremely well on an annual basis, but last 1 week they have corrected, and so their monthly return also is subdued. Let us see the funds that are in green: CPSE ETF and Quant PSU fund. CPSE ETF gave 3.67% return for the month and 118.86% for the year. Quant PSU fund gave above zero return for the month, and it's a new fund, so we don't have data beyond 3 months. The 3 months returns are reasonably good, 21.70%. So next we'll go to mid-cap funds. See, whenever there are totally 49 mid-cap funds, and the one in green are Motilal Oswal Mid-Cap Fund, Sundaram Mid-Cap Fund, Nippon India Growth Fund, Mahindra Manulife Mid-Cap Fund, Franklin India Prima Fund, UNESCO India Mid-Cap Fund, LICMF Mid-Cap Fund. The highest monthly return was by Motilal Oswal Mid-Cap Fund at 1.38, and the least was LICMF Mid-Cap Fund minus 0.39% for the month. Looking at the annual return among the green ones, highest is 66.18% by Motilal Oswal Mid-Cap Fund. So mid-cap funds are okay. See, they are not looking that bad. Next, we are discussing is the multi-cap funds. There are totally 30 multi-cap funds. Very few made it to the green. Motilal Oswal Multi-Cap Fund, Bank of India Multi-Cap Fund, DSP Multi-Cap Fund, LICMF Multi-Cap Fund. The highest monthly return was 3.55% by Motilal Oswal Multi-Cap Fund, and least was 0.65% by LICMF Multi-Cap Fund. The best annual return among the one that are in green was LICMF Multi-Cap Fund at 50.56%. Next, we are going to thematic energy funds. There are only 4 energy funds, and only one made it to the green status, SBI Energy Opportunity Fund, but it had shown negative return for the month, and it does not have annual return data because it's a reasonably new fund, 12.69% for the 3 months. Okay, so there is one more in amber, Tata Resource and Energy Fund gave a return of 44.53% for the year, which is below average, but the other returns are above average. So next, we are discussing thematic ESG funds. There are 10 such funds. The one in green are Quant ESG Equity Fund, UNESCO India ESG Integration Strategy Fund. Quant ESG Fund gave 5.42% return for the month, and UNESCO India ESG Integration Strategy Fund gave 1.92%. The best annual return came by Quant ESG Equity Fund at 50.25%. Next, we are discussing dividend yield funds. There are only 10 such funds. Only one fund made it to the green, UTI Dividend Yield Fund, which gave 3.31% monthly return and 49.85% for the annum. The highest annual return came from LICMF Dividend Yield Fund, which is at 59.04%, but its monthly return is below average. So now we are discussing infrastructure fund. There are totally 22 infrastructure funds. The one that made it to the green are Bandhan Infrastructure Fund, DSP India Tiger Fund, LICMF Infrastructure Fund. But all these funds had a negative return for the month, and their annual returns are good. Bandhan gave 77.10, DSP India Tiger gave 67.92, LICMF Infrastructure gave 81.45%. Except that there has been a correction recently. Hopefully they will bounce back. So next discussion is large and mid-cap funds. See, large and mid-cap funds have done better than large cap funds overall. There are overall 33 funds, and the one in green are Motilal Oswal Large and Mid Cap Fund, Bandhan Core Equity Fund, UTI Large and Mid Cap Fund, ICICI Prudential BSE Mid Cap Select ETF, DSP Equity Opportunities Fund, Bajaj Finserv Large and Mid Cap Fund, Invesco India Large and Mid Cap Fund. The top return monthly is 1.11% and the lowest is minus 0.23% among the ones that are green. And top annual return is by Motilal Oswal Large and Mid Cap Fund at 55.15%. Next, we are discussing small cap funds. See, small cap funds are in the middle among the top 20. So they are not that favored. The one in green are Bandhan Small Cap Fund, Motilal Oswal Small Cap Fund, Invesco India Small Cap Fund, Motilal Oswal Nifty Micro Cap 250 Index Fund, Bank of India Small Cap Fund. These are in green. The monthly return highest by Bandhan Small Cap Fund at 3.05% and Bank of India Small Cap Fund gave minus 0.37%. That means the small cap funds went through some correction weekly basis and a monthly basis. The top annual return is by Bandhan Small Cap Fund at 71.64%, which stands out way above all other small cap funds, and it has done positive return for the month, which I am very happy. So actually I did some investment on Bandhan Small Cap Fund. Even though the markets are subdued, I have a feeling that this Bandhan Small Cap Fund has an ability to bounce back, looking at the data. And there is one more, Motilal Oswal Small Cap Fund doesn't have annual return, but its 6 months return is in comparison to Bandhan Small Cap Fund, one can consider also. Next, we are discussing thematic funds. See, there are different thematic funds, and one category is called just thematic. So I call it as thematic, overall or general, thematic general. There are 114 funds. See, when there are more than 50 funds, I take only the top 50 and take the averages. And based on that average, I come with the green or amber color. The one in green are Quant Commodities Fund, Bandhan Innovation Fund, Quant Business Cycle Fund. Only 3 made it to the green. The highest monthly return among the green are 5.1% by Quant Commodities Fund and lowest is 2.4% by Quant Business Cycle Fund. So they are positive for the month. The best annual return came from Quant Business Cycle Fund at 63.51%. So that is the highlight here. So next we are moving to value-oriented funds. There are 32 value-oriented funds. The one that made to green status are Invesco India Contra Fund, Tata Equity PE Fund, Axis Value Fund. And the best monthly return 2.09% by Invesco India Contra Fund, and the least is 0.91% by Axis Value Fund. The highest annual return among the green ones was Axis Value Fund at 48.81%. Highest annual return was by Quant Value Fund at 68.21%, but it went into amber because its 3 months return is below average. So that also may be worth considering after the current corrections are over. Next, equity technology funds. Technology funds did well in the last 1 month in general. Maybe last 1 week they corrected. The one in green are HDFC Technology Fund, Kotak Technology Fund, Tata Digital India Fund, Nippon India Nifty IT Index Fund, Navi Nifty IT Index Fund, Tata Nifty India Digital Fund. The best monthly return came from HDFC Technology Fund at 5.28%. The least came from 3.66% Tata Nifty India Digital Fund. The highest annual return among the green ones came from Tata Nifty India Digital Fund at 43.40%. So next fund is ELSS funds. ELSS funds are considered for tax savings, but with the new tax regime, this 1.5 lakhs worth of investments are no more being considered in the new regime of taxation. So the ELSS funds may not become popular going forward. However, if they give good returns, people may still invest in them. The one in green are ICICI Prudential Long-Term Wealth Enhancement Fund, then series of SBI Long-Term Advantage Fund series 5, 4, 3, 1 and 2 in that order. Then SBI Long-Term Equity Fund, DSP LSS Tax Saver Fund, UNESCO India LSS Tax Saver Fund. The highest monthly return came from ICICI Prudential Long-Term Wealth Enhancement Fund at 2.55%. The least came from UNESCO India LSS Tax Saver Fund as 0.17%. The best annual return among the green ones is by Motilal Oswal is LSS Tax Saver Fund as 60.34%. Next, we are going to discuss large cap funds. Surprisingly, large cap funds are pretty much at the bottom of these 20 rankings around 15th or 16th, and that is surprising because typically large cap funds should do well in a bullish period, but we have a story otherwise. Only two funds made it to the green. ICICI Prudential Nifty Alpha Low Volatility 30 ETF FOF was 2.50% for the month. Nippon India Nifty Alpha Low Volatility 30 Index Fund returning 2.05% for the month. The best annual return among these two came from Nippon India Nifty Alpha Low Volatility 30 Index Fund at 51.11%. So next we are discussing Flexi Cap Funds. Flexi Cap Funds did worse than large cap or large and mid cap or mid cap or small cap. So this mixing up hasn't really helped. The one in green are Old Bridge Focused Equity Fund, NJ Flexi Cap Fund, ICICI Prudential Flexi Cap Fund, ICICI Prudential Focused Equity Fund, Tata Retirement Savings Fund Progressive Plan, 361 Focused Equity Fund, Motilal Oswal Flexi Cap Fund. Then two more, Bajaj Finserv Flexi Cap Fund, DSP Flexi Cap Fund. Highest monthly return is 2.86% by Old Bridge Focused Equity Fund, and the least is minus 0.33 by DSP Flexi Cap Fund. The highest annual return among the green ones is, let me look at it. Okay, 45.82% by ICICI Prudential Focused Equity Fund. So that is about Flexi Cap Funds, which are not all that great. Now MNC Funds, the name MNC sounds promising, but their performance has been subpar. Out of the 6 such funds, only 2 made it to the green status. ICICI Prudential MNC Fund, Aditya Birla Sun Life MNC Fund. At least ICICI Prudential MNC Fund gave a positive annual monthly return, but Aditya Birla Sun Life MNC Fund was negative for the month. The best annual return was by Aditya Birla Sun Life MNC Fund within this at 35.36. Not a great story to write home about. Next, we are talking about banking funds. See, banking funds are, I think, second from the bottom. I mean, it is very disappointing and surprising. So we have taken only the top 50 among these. Now, the green ones are ICICI Prudential Nifty Financial Services, negative return for the month. Motilal Oswal BSE Financials X Bank 30 Index Fund, ICICI Prudential Banking and Financial Services Fund, UNESCO India Financial Services Fund, Nippon India Banking and Financial Services Fund, SBI Banking and Financial Services Fund, DSP Banking Financial Services Fund, Kotak Banking and Financial Services Fund, Tata Nifty Financial Services Index Fund. All are negative for the month. The best annual return among the green ones came probably from this one, 35.83% by UNESCO India Financial Service Fund. 35.83 is very subdued. So banking funds have been doing bad and they're still correcting. Hopefully they will do better next week. Last one, 20th ranking is international funds. International funds have done extremely bad among all the top 20 equity fund types. And within this, green ones are PGM India Global Select Real Estate Securities FOF, gave a positive return 4.96% for the month. Edelweiss US Value Equity Offshore Fund, positive for the month. Invesco India, Invesco Global Equity Income FOF, negative return for the month. DSP World Gold FOF, negative for the month. The best annual return among these green ones came from DSP World Gold FOF at around 20.48%. So international funds have done extremely bad. So they're in the bottom of the 20 list is the story here. So this gives you an idea how the market is favoring various equity fund subtypes. So I would like to again go back to the top of the table because let us look at so the one that are really attractive nowadays are pharma funds, consumption funds, PSU funds, midcap funds, and multicap funds. So remember these five. So if you have to choose any for investment, keep these five names handy: pharma, consumption, PSU, midcap, and multicap. Okay, but look at the detailed list among these and make a smart choice. Something like small cap is way below, but I did find one good fund there. So some exceptions can happen. So with that, I am coming to the end of this report. I hope this you found it useful. Standard disclaimers are applicable as shown here, and you can see the detailed report at my blog Nats Fund Corner. If you want to spend more time with every line in the report. So with that, we are coming to the end of this bulletin. I hope you will find this very useful. See, the purpose of sharing, whether it's a weekly analysis of the top 50 done monthly or this special mutual fund report, is to empower you to make your own investment decisions than depending on someone external advice. See, the data, the performance data speaks to itself as to what is the current trend and what should be considered for investment because of consistent returns. So if you spend some time with the details, you become very smart in your mutual fund and investment. And I have noticed that people who depend on external advice for mutual fund investment is it's almost like blind, leading another blind. So their returns are usually subpar. Either it is because of communication gap or the context missing in the communication. The even if the advisor is smart and giving a good advice, but there will be the message can be misunderstood or message may be misapplied. So I have seen that. So do your own homework. My reports are very useful to you, but you need to have the patience to go through the detail. Look at it. I do this report for myself, but I do this more like an artistry because I enjoy it, of course. And second, you can find lot of use with that, and you owe me nothing in return. So hopefully your mutual fund returns can be far more better because you are very diligent with the reports I create on a weekly or a monthly basis. Hopefully next week I will come with a detailed report for the hybrid funds, because hybrid funds may become attractive if the equities will start underperforming, and if the interest rates go down, then short term the debt funds also will show better returns. As a result, hybrid funds may do better, but I'm still waiting for a day where hybrid funds in on average beating the equity funds. So that hasn't happened so far, and it is kind of bittersweet, because if hybrid funds are beating equity funds, it's a bad news for equity funds. That means we are going through severe correction. And but if it happens, those who have invested in hybrid funds will be smiling because they have got better returns than equity funds. In the last 4 or 5 years, that hasn't happened. But in the next 3 months, if the interest rates fall down and if equity is correct significantly, such a day may come. So that day hasn't come, but if it comes, this monthly review of these hybrid funds will help us to quickly recover the trend reversal. So please anticipate a detailed hybrid fund next week, which will incorporate the performance through this week. So with this, I will end this bulletin and see you soon. Have a good time with your investments. Thank you. Bye.